You're listening to Carrie Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Carrie Lutz. It's 2/21/22, which is palindrome, I guess. But be that as it may, if you're a numerological person, I'd like to know what all these twos mean and why I should care. Just shoot off an email to kl@carrielutz.com. In the meantime, let's look at the macroeconomic situation. Where do you think precious metals are heading? They're right. Gold's right around that $1,900 range, a really important psychological resistance point, hopefully soon to become a support level. And our good friend from goldsilverpros.com is with us now. I'm talking about Robert Kientz. Robert, great to have you back on the show. So macro level, we got all this talk of tightening, tapering, higher rates and higher mortgage rates and the collapse of the free world, and war drums are beating all over the world, and nobody's there to stop it. What is your take on the macro situation?
Harry, first of all, thanks for having me back on. It's always a pleasure to be on your program, and I appreciate all of the good content that you put out on your program as well, and all the great guests you have. It's an honor just to be one of those, so I appreciate it very much. So I think on the macro situation, it's really gotten kind of weird. You've got the geopolitical stuff going on. There was a lot of saber rattling over Taiwan with China. Now they're saber rattling over Ukraine and the US. And I'm one of those that believes, where there's smoke, there's eventually going to be fire, especially when it gets to this point. I don't think anybody wants to push any buttons right now, and nobody wants to be the first to go in. But just the fact that the US and its NATO allies are battling over this zone with Russia, to me, indicates that something is going to come down the line. I think Russia right now is just testing. And I don't think anybody's going to push the big red button or anything. I do think Russia's trying to figure out what they can get away with. And if they can go acquire some of these former states and, kind of bring them back into the fold, I think China's trying to do the same thing with Taiwan and potentially even Hong Kong. So we'll just have to see how that goes. But I think it's China and Russia in a way pushing back against, the imperialism that they feel like the United States and its allies have been engaged in for the better part of 100 years. And so whichever side you take doesn't really matter to me at this point. It's more about, what are the risks there? I think the market is reacting. We did hit gold, hit 1900 for the third time in history last week. Some of it, I think, was based upon the geopolitical. Although I was talking with my good friend, Steve Penny over at the Silver Chart, is the best technical charter I know of in the space. And he said, you know what, this move in gold actually happened before the geopolitical stuff. Mm-hmm. And he says it's more related to the general economy. So he thinks it's got some legs because there's an inflation component to it. And as we know, we've been hitting really higher than normal inflation numbers for the last 5 or 6 months. But the last 2 months, it's been solidly over 7, creeping up towards 8. And that's the government numbers, if you believe them. If you go with the if you go with the 80s methodology that John Williams has, it's at 14 to 15. So
yeah, I believe it. Hey, well, one area that seems to be doing quite well are funeral home stocks. They've been going up, and maybe that's a defensive play. I don't know. That's a bad one, but
that could be. No, definitely could be.
But death and taxes. So H&R Block and whatever Menorah Chapel's funeral home stock, and between the two of them, you're guaranteed somebody's going to need your services almost inevitably. But seriously, inflation's out of control. All right. The problem with inflation, and so many of you out there aren't old enough to remember the 70s and the early 80s, but fortunate for you, I am. And I became interested in economics, current events at a very young age. I still don't know why, because what good it did me, I'm not sure. But at least I can relate to you the way it was in the 70s. And that was cash was trash. You didn't hold on to cash. You put it into hard assets, whether it was gold A lot of people went to it, but into goods and services. You bought real estate. The stock market was kind of verboten in the 70s. From 72 on, it had a mega bear market. So unlike now, where the inflation threatens to lift the level of stocks, but I know people who got super, super wealthy. My family did quite well during the inflationary 70s, because if you got a business, you're always trying to raise prices. And under normal conditions, Rob, right, you have problems because you got competition. They're not raising the prices, or they're raising them a little, so you can only raise a little or you're going to lose business. And that's how competition works to keep down prices. Fear of loss of market share. But when you have an inflationary spiral, which we are most certainly going through right now, you know what happens? It's like, hey, inflation, my costs are up 10%. I'm raising prices 15. Your competitor says, well, they're raising prices 15. I'll raise mine 17. And then you have competitive price increases, and it is anti-competitive inflationary spirals. That's what you have to understand, because under normal circumstances, the capitalist system works to keep prices, in theory, mind you, there's a lot of exceptions because we have all these oligarchies, all these duopolies and oligopolies. But under normal circumstances, when capitalism functions properly, you see that it keeps prices as low as they can possibly be, and profit margins as low as possible. But when you have debt spirals and you have inflationary spirals at the same time, capitalism doesn't work. And then prices go up way higher than the actual rate of inflation. And that's where your opportunity is. If you're in a business with prices that are going up, you can up your prices higher than the rate of inflation and clean up, or own assets where you have fixed loans on them and reap tremendous profits. You agree with what I'm saying here?
I agree 100%. I think, as I've gotten a little bit older and wiser, I've started to realize some of these things. So experience does count, Carrie, even though, we have a lot of ageism and the younger generations make fun of us. The experience does count. I remember only being 6 years old in 1980, but the memory that I have was growing up in a single parent household, and my mother saying, if we didn't have this fixed rate mortgage, we would be screwed. And we had a $400 mortgage payment for this house in North Texas. And on a secretary's salary, that's what she could afford. And if we were, fully exposed to interest rates at that time in our house, we would have been, in deep trouble. So
there you have it, right? So for instance, and I'm going to give a concrete example of this so you can better understand it. If the house is worth $100,000 and your monthly mortgage payment is $400 a month, because you've got, back then, a 5% mortgage was like amazing. You could go into the fours too. It's only the 2-3% mortgage of recent decades, because otherwise we never had that throughout the history of the country. And you could, you'd be paying that. At the same time, inflation is increasing the value of your home, and effectively what the government calls your implied rent. If you were renting that house out, what you would rent it out for. So your equivalent rent, owner equivalent rent, goes up. So effectively, what it would cost for that home for somebody to rent goes way, way up. And we've seen that 18% rent increases I just read today, Rob. So we got this inflation. We haven't seen gold and silver become the major beneficiaries of it, but it has to happen, doesn't it?
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
It does. Everything else in the economy is going up. Fortunately or unfortunately, depending on how you look at it, either from an investor or a purchaser perspective, commodities have already started to pop. You see copper at over a 10-year high, zinc at over a 15-year high. So some of those commodities are really starting to move up. And I don't think that we've seen that, hit the precious metals yet. But it is hitting prices all over the place. And it's not going to be too long, Kerry, before people figure out, wait a minute, why aren't the precious metals rising as much as everything else? And if you look specifically at silver, it's trading at half its high from 1980, $50. And that's not inflation adjusted. And it's the only resource that I know of that's in more scarce supply than it was 40 years ago, but is trading at half of what it was 40 years ago. And again, that's before inflation and prices. So if you inflation adjusted that $50 at something like 114, I think that, if we had equivalent prices to back then and in that boom, silver would be much more expensive. Now that was a boom, but again, we had excessive surplus back then. The geological survey said that the US had something like 50 million ounces surplus just sitting around. That's before silver really started to become industrialized into, all of our modern electronics. Now the Silver Institute is saying that we're probably at a 100 million ounce deficit expected for 2022. And we're going to be, needing over 1.1 billion ounces for the first time in history, but the miners are expected to put out about 800 something million. And then you get some from scrap, but it's not enough. So gold and silver, really the supply demand characteristics for those, I think, are very bullish. It's just a matter of time before the market recognizes. And to explain why the prices have not already gone up so much, they're controlled in the derivative market, and a lot of the pricing is controlled by gambles and bets on speculators. It's not the physical supply does not determine the spot price. So when those gamblers decide, it's time for us to go long in gold and silver, then you'll see the prices rise. But it always happens after, the demand supply has become bullish for gold and silver. That does give people a little bit of a window. If you see what's going on in the markets for gold and silver right now, you can get in now and expect in the futures the prices should rise when, the big market traders decide, it's time to go long the futures.
Yeah. Yep. This is true. And we've seen all this happen before. I'd also point out one other thing about silver. Silver is the only commodity to not make an all-time high in the past 40 some odd years. Every other commodity out there has done so. And you might want to hold on to the grandma's silver, because at some point that could be your key to wealth. If silver gets over $50, there will be no stopping it. If it makes a new all-time high, it'll pull back. But we're going to see this happen like we've seen in every other commodity. Copper, oil, oil made its all-time high several years back, but it's going to make a new all-time high at some point. Nat gas spiraling. Every commodity out there is spiraling. Even coffee is up 40-something%, right?
Yeah, everything's up. And, when Sally Homemaker goes to the store, she sees two things. She sees prices for meat, dairy, and eggs up a lot. I mean, a lot, Kerry. Bacon is twice what it was 2 years ago in my area. But also they see shortages on the shelves. I went Super Bowl Sunday to the grocery store just to pick up a few things, and all of the chips were gone. All of the meats were gone, down to like the last set of pork chops in a Walmart Supercenter. All of even the frozen stuff was gone. And I know that Super Bowl Sunday is a popular time, but I've never in my life in 40 something years seen Walmart go completely blanked out of all of its dairy and all of its meat in a major store in North Texas. I mean, that kind of shocked me. So in this same store that I went to, I put this on my channel, I saw them basically close off a third of their floor space in this Walmart that's been here for a long time here in North Texas, in a fairly affluent area in North Texas. They walled off a third of their store, and I took video of it while they were walling it off, and there's nothing there at all. So it's a situation in which they're reducing their floor space, and at the same time, they're running out of stuff, even having reduced their floor space by a third.
Yeah, and these are staples they're running out of. So all these things converge to make the precious metals sector extremely attractive at this point. Even gold, it's third time over in 1900. It hasn't made a new nominal high in a couple of years, Robert.
It hasn't. In the 1900, Kerry's just returning to what it was in 2011 when you had the last big cycle. That was in reaction to the Lehman and the mortgage crisis, 2008, 2009. Took a couple of years and gold reached a high and then it came back down, which made sense. Since then, we've had this very bullish formation called the cup and handle, where gold has started to recover from 2016 all the way up to 2020. I think it reached a high around 2060. So it was a new all-time high. And then it came down 18 months in a consolidation. Usually on that type of pattern over a 10 to 12 year chart is extremely rare, but it's also extremely bullish, regardless of what you're tracking. So I think, and the consolidation has happened in like a wedge pattern. I wish I could draw a picture, but all of those signals, the wedge pattern the last 18 months, the cup and handle are all extremely bullish. And given the economic fundamentals that we see, plus that technical pattern, it seems to me that, gold still has a long way to run. I mean, it could come back down, trade at 1800 again, but I just don't see it staying there for a long time because there's too much risk in the system.
Yeah. Not to mention the geometrically increasing debt, 30 trillion worth, and all the entitlements coming due. Luckily, I'll be getting my Medicare in, 5 months I'll be getting it. So you're going to have to pay me for a while. Hey, well, I'm already counting my surgeries that I'm going to have because Medicare pays for everything. But seriously, and then Social Security. Don't worry, Rob, we got a couple of years to go before that till I decide to take it. So you're going to be okay there. But maybe I'll wait. But millions of others of you out there are not going to wait. You're going to start taking it now. And the dike will break. They're not going to default, but they're going to inflate even more. Inflation's here. It's going to be a 20 to 40 year cycle. And you should start planning to profit from it now. Precious metals among one of the areas you should be looking at, saying that not to give financial advice, but to discuss these important concepts with you. Hey, Rob, just tell us, where do we find you? Where do we read your work?
You can go to goldsilverpros.com is the easiest way. You can also hit us up, Gold Silver Pros, on either YouTube, Twitter, or on Spotify.
Excellent. All right. And we'll have a link in the show notes to this interview on financialsurvivalnetwork.com. Don't forget, go there, sign up for your free newsletter, and you can send me emails. If you got a question for Rob or any other guest that you have heard on the show, just shoot me an email, kl@kerrylutz.com. Rob, always a pleasure. Thanks so much for stopping by.
My pleasure. Thank you so much, Kerry.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.